I'm Charlotte McLeod with the Investing News Network, and here today with me is Justin Huhn, founder and publisher at Uranium Insider. Thank you so much for joining me online today. Great to see you again.
Good to see you too, Charlotte. Happy to be here.
Yes, so we've got definitely a lot to talk about. Lots of things happened in the uranium sector since the last time we were together. Where I want to start, so I know that interest is strong in uranium. There's a lot of people who are following the market very closely, but I do think that we've seen a little bit of that summer doldrums feeling right now. So I wanted to get your take on sentiment in the market and kind of that seasonality angle that we're seeing at the moment.
Sentiment definitely has been mostly negative, I would say, for the bulk of the summer. We've had a couple of small rallies, but I think that investors get frustrated during the summer months. And the summer months are always very slow for uranium, and honestly for most markets, especially into August. You have actually the lowest volume trading across markets happens in August. And so it's definitely been kind of the summer doldrums. While there's been mostly positive news flow coming into the uranium sector, just almost on a daily basis. And I think that has led to some of the negative investor sentiment, which is all of these positive things continue to happen and these fundamentals keep stacking up, but why are my stocks not moving? Obviously today, as we're talking, we're seeing really, really big moves up in the uranium sector due to some news that came out of Japan last night. So sentiment shifted, it shifts on a dime. So it's certainly more positive now, but I think there's a lot of fears around broad market influences, potential worsening recession going forward, a lot of questions around when and if the Fed will pivot their hawkish rate hike regime, et cetera, et cetera. But for uranium, it's the setup here. Honestly, I just pinching myself almost on a daily basis. I can't even believe how things have rolled out over the past 12 months to really support a much higher uranium price going forward.
Okay, and let's continue on with some of the things you've been talking about there. You mentioned the news out of Japan. Just for context for everybody, today is August 24th. I wondered if you could go into that news and what it means for the market.
Sure. Well, since the new Prime Minister Kishida had been elected, he's been very adamant about increasing the pace of restarting the reactors in Japan. So I'm sure your listeners are pretty well aware of the historical situation in Japan, but just to put it briefly, Japan was at the time the second or possibly the third. No, I think they were the second largest nuclear producer of nuclear energy prior to Fukushima. They had 54 operating reactors. And after Fukushima, they shut down all of them over the course of about 12 months. A couple years after Fukushima, a number of I think starting around in 2014 is when the reactor started to apply to restart. The first restarts happened in 2015, but they've been going very, very slow. And so since 2015, there have been only 10 reactors restarted in Japan. And there's actually 3 or 4 of those that are offline currently for maintenance and safety upgrades. But Kishida has basically come out stating that he intends to have Japan at 20 to 22% nuclear as a percentage of their grid by 2035. And that would be an additional 20 plus reactors restarted. And now, so last night, there was a number of articles that were being shared around quoting the prime minister saying that he would like to see at least 7 more reactors restarted by 2023, by like the middle of next year. And so obviously that has multiple implications. The largest, and he also said they would want to build new reactors, build new advanced reactors and really embrace SMRs. And so that's a big deal as well, potentially. But the market obviously is reacting profoundly positively to that news, which kind of goes to show you that the market sort of understands what that means. And not only is it, it's a demand story, it's a supply story. So we could, depending on which reactors are restarted and those utilities, what sort of inventories they might still have in their own possession, we could actually see renewed demand from these restarts. And of course, it also means it's less likely that Japanese utilities will be selling pounds of inventory back into the market if they're going to be expecting more reactors coming online in Japan. So that's the supply and demand, but then it's also a messaging to the market, right? And it's a messaging to the world. It's like Japan is clearly stating here, and especially now that they have majority public support of restarting their nuclear reactors, they're saying this is clean energy, it's reliable. We need this now, and we're going to get more aggressive about restarting. So you have Japan doing this, and then you have Germany, against all logic, still sticking to their guns, saying they plan on decommissioning their last 3 reactors as their populace is paying all-time high electricity rates right now. So it's a big signal, really, to the world for Japan to re-embrace the country, because Fukushima is by far the freshest memory in everyone's mind in terms of scary nuclear disasters, right? Even, it caused 0 fatalities, but still, anytime you have a conversation with somebody about nuclear energy, that if they don't really know what's going on with nuclear, they'll bring up Fukushima immediately, right? So for the country that suffered that meltdown to be re-embracing nuclear, it's really a strong signal.
Okay, yeah, thank you so much for going through all of that with us, because I know people who've been following it know that for years and years, we've been told Japanese restarts are something that's really important to watch. Staying on the demand side, I remember last time that we spoke, it was back in April. You touched on, basically you're telling us that we're going to see fundamentals come into play in uranium. You talked about utilities starting to compete with the Sprott Physical Uranium Trust for supply. So I want to ask about the demand side there as well, and what we've seen since then.
Sure. So April, let's see. I think we had already started to see pretty significant jumps up in conversion and enrichment pricing. Those 2 things have seen huge gains this year already. And so we've seen enrichment, I believe, spot enrichment is up over 130% on the year. Long-term enrichment is up significantly. Conversion and UF6 are also up huge. So we've seen massive moves in the back end of the fuel cycle. U308, spot U308 is up about 15% on the year, and long-term is up about 20, maybe close to 25% in the year. But really what the story of the nuclear fuel cycle since April has been a continued reaffirming of a bifurcated market. And so what we have currently is a situation where Western utilities are no longer buying from Russia. And that's a big deal, because Russia is the largest player in both conversion and enrichment. And so while you have around 70% of nuclear energy production existing in the West, you only have about 40% of global enrichment capacity coming from the West. So what that really means is, until the West can build out more enrichment capacity, which takes billions of dollars of investment and multiple years. So, a best case scenario is probably 4 to 5 years from now having new enrichment capacity. And so between now and then, the only way that the West can get sufficient enriched uranium from Western enrichers is by overfeeding those centrifuges at the enrichment plants and raising the tails assays. So the actual percentage of the fissile U-235 isotope that's left over from the enrichment process, that is what dictates the amount of uranium that they need to feed into the centrifuge to get the same amount of enriched uranium out the far end of that process. So right now what's happening is utilities are discussing this with producers. And so they're trying to figure out, not only are they trying to figure out the enrichment contracts, the cost of SWU, the amount of SWU they're going to need. That's basic separative work unit. That's basically the cost of enrichment and the energy used for enriching, and the tails assays for those contracts with the enrichment producers, right? And so once you know that, then you know how much uranium you have to buy. So you have to figure out that enrichment part first. That's what's happening now. But we're already seeing a pretty significant jump up in long-term contracting this year with 76.5 million pounds signed year to date already. And I think we're going to have the highest volume term contracting year in over a decade this year. In my opinion, I think we'll reach those levels by the end of the year. So the back end of the fuel cycle is very tight. Utilities are trying to figure out that enrichment piece of it, and then it's going to trickle down to uranium, and that's coming very soon, in my opinion.
Okay, and the Sprott Physical Uranium Trust, also a source of demand. I think now at this point we're about a year out from the launch. What have we seen? What have we seen there in terms of their demand recently?
Right, I forgot about that part of your question. Sorry about that. They've been pretty hamstrung for about 3.5 months. They've been trading at a very persistent discount to their net asset value, which they don't like to raise money in that environment through their ATM because it's not accretive to shareholders. Today, they actually did trade up close to NAV, if not at a slight premium. So I actually think they were probably issuing shares into the market and raising money today. But yes, the 17th of August was the 1-year anniversary of that ATM going live. So since that period of time, they purchased, I think it's 36 million pounds of uranium. They purchased 16 million pounds year to date, but they've been pretty much out of the market, with markets being, generally speaking, risk off for the past few months. In my opinion, that's a temporary story. I think that they're just kind of a beast that's just waiting to be woken up. And I think they are about 80% owned by institutions. And so when institutional money flows into the space, that's kind of the darling. And so institutional money goes after Sprott. Sprott trades up at a premium to NAV. They raise cash, they buy uranium. And it's just this kind of self-fulfilling prophecy. So Sprott has been, like I said, they've been doing very little purchasing and very little money raising over the past 3 or 4 months, but I think that that's about to shift.
Okay, so I want to go back to the Russia-Ukraine war. I think that it's really increased awareness about enrichment and conversion, which is something that we talked about, I think, pretty extensively last time we spoke, and we talked a little bit about it right now. The other thing that seems to be now coming into the spotlight is this overfeeding versus underfeeding, which you also were going into a little bit. I wondered if you could talk more about that, because I think it's a confusing part of the process, but I believe it's something that investors probably need to know about if they want to be in this market.
Sure. So I don't have a SWU calculator in front of me, but basically there's this, you can actually go to a web page on Urenco's website, and they actually have a SWU calculator. And so you can plug in the amount of KGU in enriched uranium that you would need from the process, the level of enrichment, which on average is about 4.5% enrichment. Natural uranium is 0.7% U-235. So when they enrich it up to around 4.5% for just the average, light water reactor. So this calculation is how much EUP do you need? What is the percentage of enrichment that you need it at? And that's unique to each reactor, right? Then you have that will plug in how much SWU you'll need for that process. And importantly, one last element of that equation is the tails assay. And I just briefly explained that, but the percentage of the fissile isotope that remains in the waste product of that process. So typically that, until we entered this situation we're currently in, you were seeing tails assays for Western enrichers run at about 0.17, 0.18 U-235. So that was typical. We're already hearing that the Western enrichers have bumped that up for spot enrichment to 0.24, 0.25 tails assay, with long-term contracts and enrichment being signed probably above 0.3. And so just to give you an idea, the demand for UF6 or uranium coming into that process from a tails assays jump of 0.18 to 0.3 is about a 25 to 30% increase in feedstock in demand for the uranium feed. So that's what's happening right now. So the demand is about to really hit uranium. So to briefly explain underfeeding versus overfeeding, when the enrichers had a lot of excess capacity due to reduced demand for enrichment, and that just has to do with the fact that the utilities were able to buy a lot of enriched uranium over the years, especially from the Russians, very cheap. And demand for uranium, for enriched uranium for SWU had dropped precipitously since Fukushima. And that bottomed, I believe it was August of 2018, if I recall correctly. And it's been in a strong uptrend since then. But when the enrichers have excess capacity due to reduced demand, what they can do is, let's say they can sign a contract with a utility for 0.19 tails assay. And then if the demand is not there and they have excess capacity at the time they need to actually enrich the material that utility provided the UF6 to them for, that's the feedstock, uranium hexafluoride, the converted uranium. If they have excess capacity, they'll actually spin it down to a lower tails assay than what they contracted for with the utility, which means they'll need less feedstock. So they literally underfeed the centrifuge. They feed less feedstock into that centrifuge to get the same amount of enriched uranium out of the far end of that process. So the utility contracts, they need X amount of EUP at X percentage enrichment. And the tails assay and the feedstock are the variables. So if they can spin it down to a lower tails assay than they contracted for, they literally have excess UF6 and they sell that UF6 into the spot market. That's underfeeding. Okay. So that was 20+ million pounds a year of supply, of secondary supply coming from underfeeding. And the second part of that, in terms of secondary supply coming from excess enrichment capacity, is due to tails re-enrichment. So if they have a lot of excess capacity, they can actually take those tails that are sitting at 0.17, 0.18, whatever it might be, tails assay, and put that material back in the centrifuge and spin it down further and also create more UF6 and spin it. They basically enrich it back up to 0.7 natural uranium, sell that UF6 into the spot market. So that's underfeeding, right? Underfeeding is spinning at a lower tails assay than they contracted for. They have excess feedstock. They sell that into the spot market. Overfeeding is the exact opposite. Overfeeding is where they will actually be enriching the UF6 with a higher tails assay in that process, and it requires far more feedstock. And so they can actually overfeed. That's the only way to get more enriched uranium faster with limited capacity, is to raise those tails assay and overfeed and excess feed in the front end of that process. So we're shifting. This is why it's such a big deal, is because we're going from a 25 million pounds a year of secondary supply. That's gone. Okay. So not only is Cigar Lake and a half gone in terms of, U3O8 equivalent, but the overfeeding is increasing demand. So we're talking about a significant swing in demand from 25 million pounds of excess supply to actually seeing 10 to 20 million pounds of new demand from overfeeding. And that total swing is, we're looking at 35, 40+ million pound swing that's happening right now. It's starting right now. And that's really an important point, because not only is it a huge swing, but also in the past, as a utility, because of that underfeeding process and the tails re-enrichment process, you can go as a utility to the enrichers and buy UF6 from the enrichers, enrich it, get your fabricated fuel, and you're that much closer to the end product that you need for your reactor. And you don't even need to buy uranium. You don't even have to buy the U3O8 and send it to a converter. You can go straight to the enricher and buy the UF6. They can't do that anymore. That's gone. So it's a massive fundamental shift in how the utilities are going to have to source uranium going forward. And all of the utilities that are uncovered 2025, 2026, 2027, they are coming to the table right now. They're talking with Urenco, they're talking with Orano, they're talking with Cameco and Kazatomprom. It's happening. It's on.
Okay, sorry to make you give such a long explanation, but I think it's really valuable. Certainly, I'm going to come back to that and take another listen and make sure I caught all the details there. Moving on to something that's a little bit more technical, I want to talk about recent M&A activity in the uranium space. We had that bidding war erupt for UEX between UEC and Denison Mines. I wanted to get your take on the end result of the deal for the companies themselves, but also probably more importantly, what does this mean for the broader sector?
Sure. Yeah, that was a really interesting bidding war. UEX has been a relatively quiet company for years. The stock hasn't really performed. They're sitting on assets. They do the occasional small drill program, but it seemed like they were almost waiting to be bought out. And it was kind of a surprise to actually see UEC go after them, because it's an entirely different jurisdiction than all of the rest of UEC's uranium assets. But Amir is pretty aggressive. He knows what he's doing. They've set themselves up. They have sufficient market capitalization and cash position to do this roll up. And they had a brilliant acquisition of the Uranium One assets that happened, I believe it was late last year. I thought that was a fantastic move for them. The UAX one is a little bit of a head scratcher, but it looks like they're just going for kind of this pounds in the ground, largest holder of uranium pounds in the ground, North America kind of thing, just rolling up various projects. So clearly they have a plan. It doesn't seem like it's a fantastic fit, in my opinion, with that latest acquisition, but it probably would have made more sense in the hands of Denison. And I think that if the shareholders of UEX had actually been a little bit more proactive, they would have got the same deal and had the ownership go to DNN, to Denison. But anyways, I think that really the broader picture is you don't see this happen in bear markets, right? You see bidding wars for these types of assets. This is something that's happening in a bull market. So obviously both Denison and Uranium Energy Corporation see the writing on the wall, and they know where this market's about to go. Otherwise, they wouldn't find any value in UEX's assets. So clearly, this is it's a positive signal for the resumption of a bull market for uranium, in my opinion.
Okay, and so when this was all going on, we did a poll on Twitter. We asked people, do you think this means we're going to see more mergers and acquisitions? And overwhelmingly, people said yes, which was interesting to me, because we always hear about how the universe of uranium stocks is quite small. So what would be your take on that question?
Yeah, I think we're likely to see more. There's a handful of companies that have decent assets, but don't really have, let's say, the vision or the aggressive promotion of management that are probably going to be takeout targets. I can think of a few in the United States in particular. But you're right, it's a very, very small space. So there's really not a lot of options. And I think that we're not quite in the mania phase of this market by any stretch of the imagination. So, you hear whispers about, why doesn't Cameco go after NextGen? Cameco's got over $1 billion in cash, and NextGen's just right there. But, who knows if that's going to happen. But I do think there's a lot of companies that have pretty good, if not great, assets that are likely going to be taken out during this bull market. Whether that happens in the next few months, probably not. But I do think we'll see more M&A, definitely.
Okay, and speaking more about companies, we've been talking mostly about what's going on in the uranium sector, but overall, worldwide, we have concerns about recession. We have concerns about inflation. And I wonder how you see those elements affecting companies and their plans, even though uranium itself is doing well. We've got these outside forces.
It's interesting. Mining is really, really difficult. It's one of the most difficult things to do, literally pull minerals out of the earth. And I think that markets a lot of times make assumptions that the mining processes will happen on time and on budget, and which basically never happens. And so most recently, I can think of a couple of examples of CapEx costs rising significantly. So one of those would be Paladin's estimated CapEx for the restart of Langer Heinrich in Namibia. Their original estimate, or at least the next to the most recent estimate, happened in November of last year, and they estimated 87 million would be the CapEx cost to restart Langer Heinrich. They updated that about 6 weeks ago to 117 million. So we're talking about 8 months later, a 30+% jump in CapEx costs. So that has to do with diesel fuel. It has to do with supply chain problems. It has to do with straight up inflation, labor shortages. And so that's a big example. And that, Paladin has the cash to cover that. But it's interesting because those costs, they're not just going to eat those costs. Those costs are going to get passed down to their customers, and their customers are nuclear utilities. So these rising costs for producers bringing mines back online or expanding production or even just maintaining production are going to be influencing a higher uranium price, period. Another example would be Kazatomprom, excuse me, last Friday had a second half of the year, what do they call it? A first half of the year operations update. And they put out a press release and released some financials, and their CapEx costs went up 22% year over year. And so we're talking, the cost of sulfuric acid and the cost of fuel, the cost of labor, et cetera, have risen by 22% in Kazakhstan. And that's for the largest producer on the planet. They're producing almost 60 million pounds a year. They plan to increase their production slightly in 2024 from about 23,000 tons to 24.5 to 25,000 tons, which is about maybe a 3 to 5 million pound per year increase. Not a huge increase, still 10% below their subsoil use agreements. So they're still maintaining what they're calling a value over volume strategy in terms of their production. But I think it's obvious that costs are going to go up and have gone up for producers, period. So you can take, some of these marginal projects that are higher cost, lower grades, where they needed in the past, let's say $65 to $75 a pound of uranium in order to justify starting the development of those mines. That's more than likely probably $85 to $100 a pound now. And that's just the way it is. I mean, so we're looking at significantly higher uranium prices to begin with. Now we add all of these inflationary forces that are going to increase costs and delay, most likely. I mean, we're even seeing it with Cameco, with a company with all the cash in the world and historical production, plenty of access to sufficient labor. They still have a lot of hiring they need to do for McArthur River. They're in the process of bringing that mine online. Now they're saying they're going to be lucky to get, a few million pounds out of McArthur this year, and they're probably going to be back in the spot market. And so even the biggest, one of the biggest producers in the world for uranium, they're having trouble bringing that mine back into production in a timely manner and on budget.
Okay, that's all really interesting. And I think that's a good look at the producer side, which is, of course, important for supply. I wondered if we could talk about exploration as well, because you mentioned we're not there in that mania phase. And to me, that kind of calls to mind, when all the explorers come, they change their name to something uranium. They start going out looking. We're not seeing that. I know for juniors, it's hard to raise money right now. What's your take on that sphere?
Exploration is a tough game. It's definitely a tough game, especially for the micro caps. For a company that's, 10, 20, $30 million, market capitalization, for them to raise enough money to do a decent drill program, that's significant dilution to shareholders. That's just the way it is. And it's tough. It's really tough until you can actually make a significant discovery that will move the share price up and bring some much needed capital into the company. So, we're starting to see, we've seen over the past 18 months, I think maybe 5 or 6 companies pop up. A lot of them have showed up as Australian listed companies with properties in the United States, which is kind of interesting. So there's a company, I think, what are they called? Kraken Energy, I think, that just kind of, whether they changed their name or just decided to go after uranium, but they have an asset in Nevada. And I think they've got about a $30 million market capitalization. GTI Resources showed up about 18 months ago. They've got some stuff in Utah. So we're starting to see companies sort of filter in, recognizing the opportunity, but it's certainly not mania like we saw in the last cycle, at least not yet, where we had, a company a week, changing their name to XYZ Uranium and buying some moose pasture somewhere. But it's slowly happening. I mean, we had about 50 companies in the uranium space, let's say 3 or 4 years ago, and I believe that there's about 65 now. So it's slowly expanding. Yeah.
Okay, so little baby steps. As we are finishing up here, I want to check in with you on basically your strategy for approaching the market right now when it comes to the stocks. So we know we've got this uranium bull market going on, even as we have outside external pressures on the market. We have M&A activity going on. We have producers that are struggling a little bit with the higher costs. How are you approaching stocks in your portfolio at the moment?
We tend to look for companies that will, during the bull market, ideally actually be producing something and be producing some cash. So that's kind of a baseline. I mean, it's not necessarily a hard line, but we prefer companies that will have some classical fundamentals in terms of cash flowing eventually. We really like companies that have individual company catalysts that are expected by the market or unexpected by the market is my favorite. If you can have some kind of insight into their processes, whether that's through conversations with management or an understanding of their assets and what they plan to do with them. But to have individual company catalysts that happen during the bull market that don't necessarily rely on the movement of the markets as such. So if an individual company has news that's quite bullish, that company clearly will outperform the average company in the space. And though, a rising tide lifts all boats, if you go back looking at a 3 or 4 year chart of any of the companies in the space, I mean, there's companies that are flat or up just, single digits. There's companies that have done 15, 20x. And so a rising tide will lift all boats, but having a pointed investment strategy to find the companies that will have individual company catalysts during the bull market, in my opinion, is absolutely crucial.
Okay, I think that is all for me, but I wondered if before we close up, if you could remind people where they can find you. And if you did have any thoughts on uranium that you wanted to share, that would be great. I know we've covered a lot, but there are still so many elements that are out there.
Sure. Yeah, I can be found at uraniuminsider.com. That's our website. I'm also relatively frequent on Twitter at Uranium Insider. I think just final thoughts is I do expect a relatively strong seasonal period for uranium this year. It doesn't happen every year. Last year it happened early because of Sprott, but on average, Q4 into Q1 is typically the strongest part of the year for uranium. And the reason for that is we have the WNA conference in September, first week of September. We have renewed budgets in the beginning of a fiscal year for a lot of the nuclear utilities, especially in the US. And we also have a uranium fuel seminar happening in October in Las Vegas. And all of these elements compounded with what is happening in the fuel cycle and this unique, newly bifurcated market. And what I already expressed to you in terms of what we're seeing with rising tails assays and enrichment going to equal much higher demand for U3O8, that could all potentially coalesce in a similar time frame. Now, of course, the broad markets, if they go further risk off, if we see another flush down in the broad markets, of course, that might affect us. When uranium is quiet, when the spot price isn't really moving, we tend to be coupled with the broad market. But honestly, looking at days like today, where we're seeing, let me see, hold on, I'm gonna bring the chart up right in front of me right now. URNM or URA is up over 10% today and right at the highs on the day. I mean, that's a huge, huge move for an ETF. So the interest is there. The news flow is positive. I think we could see a really, really strong Q4 for uranium this year. And I'm very much looking forward to that.
Okay, I think that's a great point to end on. I think a lot of other people are looking forward to that as well. So thank you so much for coming on to talk. You always leave us with really a wealth of information.
It's my pleasure. Thanks for having me. I'm happy to come back anytime.
Great. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Justin Huhn with Uranium Insider.